All right, so I sold my Facebook shares today at around 169.75, shares that I bought back in November at 136, but also at 145. So I had an average price of 140 and I sold it today at 169.75, as you can see here, which gives me a 21% gain in about 3 months. Now, the reason I sold it is because although I truly think that Facebook will go back to $200, but I don't know in how much time it's going to take to reach $200. I still love the business model. I find it so simple, so clean, but there's just so much negativity right now in the media with Facebook. Honestly, I find the negativity is just jealousy because of how fast they've grown. I mean, in terms of data privacy and collecting data on people, I mean, Google does it as well. All the advertising companies do it. It's just that Facebook grew so fast that it caught everyone's attention. I honestly felt that after these earnings that when I initially bought Facebook, I thought for sure by January it would reach 200, but it didn't. So I felt like if it reaches 200, I would be disappointed, but if it drops back down to like 140 or lower, I'd be even more disappointed. So I felt like lesser of two evils. I'll just take my profit right now. 21% is not bad. In 3 months, take it, look for something else, repeat the process. So yeah, so I made 21% on this trade, but of course, this trade does not represent my full portfolio. So if I've got about, let's say, 66,000 in my portfolio, this trade was about 2,300. So it represents about 3.48% of my total portfolio. So my 21% gain impacted my portfolio by 0.73 of a percent, so not even 1%. So because I didn't use that much money in that trade, although it was 21%, but because it represents a small portion of my total portfolio, it only impacted my total portfolio by not even a percent. So that's something that I don't like about capital gains or trading or swing trading, is that I'm never going to be using my full portfolio. I'm always going to be breaking it up into 20 or 30 chunks. And in order to make an overall decent return on my portfolio, I need to make 30 trades of 10 or more percent in a year, unless I break it up into 4 chunks, for example. But then it becomes risky because not all my trades are positive. I could end up waiting for a long time before my trade returns to positive. For example, in my RSP right now, got General Mills, I'm up 8%, so that's decent. FTN is probably something I'm going to keep. DFN as well. Bank of Nova Scotia I plan on selling, but maybe at around 80 something or 90. Alibaba I plan on selling, of course, at around 190, 200. Honda Motors plan on selling as well. So I've got one that's probably ready to sell, but everything else I'm going to keep. And then the rest, I've got 1, 2, 3, 4, 5 that I cannot sell that are losing trades. Vodafone I'm down 16%, although it pays dividends, so that's okay. Dividend 15 split. Corp 2 does not pay dividends yet, but once it does, it's going to be at a high yield. Not sure if I'm going to keep it or sell it. Alta Gas. Alta Gas I plan on selling, but it's down right now. And while I'm waiting, I'm collecting 6% dividends. Ford I plan on selling as well, but it's been a while I bought Ford, but as soon as it goes back up, let's say to $10, I'd probably sell. And while I'm waiting, I'm collecting dividends. So Apple went up today as well, 166. I have an average price of 179. I'm really disappointed I missed out on buying it at 142. I had an order at 142 one day, and the lowest point was 142.01 or something. So I missed it by 1 cent. But if I hadn't missed it, my average price would have been much better, and I probably would have been profitable by now. But instead, I'm down 7%. GE, I'm up 29% on GE. I bought at 7.85, but regretfully, I sold call options against it. Big mistake. I can't even take advantage of this 29%. American Airlines, I'm up 15%, but same mistake. Snapchat is another story. Micron, similar story. TransCanada is probably something I can sell at around 56 or 57. It pays pretty good dividends, like 4 or 5%, but I'd rather take the capital gain right now and move on. If we look at TransCanada, let's say for the past 10 years or 5 years, I mean, for the past 5 years, from 48, 5 years ago it was trading at 48. Right now it's at 55. I mean, that's too slow. I don't want to hold the stock for 5 years and then 5 years later it's only up like 10% or 15%. let's see, 10 year, let's see, 25 years. Well, I like how consistent they are with their dividends. So let's look at 1995. It was trading at $18 and now it's trading at $55. So also not so great. 55 divided by 18 minus 1 divided by 1995 and 2018 is what, 23 years? So that's like a 9% return per year, or a 9% increase on the share price average return per year. It's not 9% compounded. The end result of the compounding effect is 9% per year. So it's not that great for the share price. Obviously the dividends are great, 25 cents in 1995 and in 2019 69 cents. So dividends did not grow by that much actually. 69 divided by 25, 2.76 minus 1. So dividends grew about 7% per year. And that's the end result of the compounding effect, 7% average return per year. So I don't know, I don't have that patience to get these kind of results. I don't know what happened with United States Steel today, but it dropped hard in the morning and then recovered like crazy the rest of the day. It reached 19.95 today. It reached 19.95 and then it finished the day at 22.5, but it reached 22.86 today. So look at this difference from 1995 to 22.86 in the same day. Now I have call options on that I sold at a 20.5 strike price, but I bought the stock at 21.8. So when the stock reached 19.95, it was a good time for me to buy back the call option to avoid getting called away at 20.5. But it just went back up so fast. I didn't take action fast enough, and now it's trading at 22.5, but I bought it at 21.8, and the strike price I sold the call options at was 20.5. So I don't want to sell it at 20.5, but at the same time I can't buy back the option because it's going to be too expensive. So I sold the option at 138. It's worth 219 right now. So I don't want to buy back at 219 just to keep the shares and then sell call options again, unless if I sell the next month's call option, I get more than $2.19. So they expire February 8, I believe. Yeah, so they expire February 8. So let's say I go for March 8. The 21 strike price would be around $2.08. But for me to buy it back, I'd have to buy the 2050, of course, because that's the one I sold. So the 2050 is trading at 210. So it would just cancel. It would just cancel each other out just to keep my shares an extra month. So I'd have to see if there's an advantage to keeping my shares an extra month. Maybe I can go further out and pick a higher strike price. Let's say 21. I'm at 217 or even at 20, but I don't want to go backwards. So yeah, I don't know what I'm going to do yet with this stock. Hopefully by February 8, it trades below 20.5. As you can see, the crazy fluctuation it's able to go through in one day. Now, aren't I glad I sold Amazon at 17.30, I think? It's at 17.30. I had bought it at an average price of 15.15 because after hours it's trading below. It's trading in the 1600s after earnings. Here, let me show it to you. Hopefully it's showing here. Yeah, so you see it's trading at after hours. It's trading at 16.35. So I'm glad I sold it at 17.30. Who knows what's gonna happen tomorrow? It might trade even lower. If it goes back to 1500, I'm definitely buying it again. Oh, Google. I definitely sold Google a bit too early. It's trading higher than the price I sold it at, but whatever. I think I sold it at 11.05. So I got my TFSA finally transferred from my CIBC Investors Edge account to Questrade, but it seems like it's missing a few things. It didn't take the cash portion of my Investors Edge account. It just took the stocks but left the cash amount. I mean, it's not a big deal. I could withdraw the cash from Investors Edge and then transfer it back to CIBC to Questrade. Since I'm not at my max contribution limit yet, I still have a lot of room, but it's just weird that they didn't take the cash. Maybe tomorrow it'll show up, we'll see. Yeah, so now my buying power in my margin account in Canadian, my total buying power now is 37,000, and that's because I added to my TFSA. So it's beautiful. I get to trade in my TFSA, take advantage of tax-free gains while having extra buying power in my margin account in case I want to buy something that I think is a great deal and I don't have the funds for. So I'm going to try to use my RSP and TFSA first, and then once everything is in equities and let's say I want to buy something I missed out on, then I'll use the margin account because the interest rate is way too high on the margin account. It's about 9% per year. H&R Block dropped hard today, all the way down to 22.96. So I'm thinking of buying. I put an order today at 22.85. It didn't go through, of course. I got picky. But this is a stock I bought and sold last year at a profit, and I think I might buy back some more at around 23. Pays around 4% dividends per year. And tax season is coming, so for sure after April, or for sure their next earnings call will be a good one. Oh no, just realized Macy's went up today, closing at 26.3. I needed to stay under 27 by February 15, so 2 weeks. I needed to stay under 27 so the shares don't get called away and I can sell another call option. So let's say right now, currently, if I wanted to sell a call option on Macy's for 1 month out, let's say March 1st, let's say if I end up keeping my shares, I'd go for maybe a $28 strike price. I always want to go for the highest strike price possible. If I think the stock is bullish, it's going to go up. So I'll try to pick a strike price the further out from the current market price so that my shares don't get called away. The premiums will be lower, but at least I'll keep the shares and I can repeat the process. But obviously you have to take into consideration the fees. There's $11 for trading the option and there's $25 for getting your shares called away automatically. So let's say I were to take the 28 at, let's say, 75 cents minus $11 divided by, I think I bought it at 25.82. So that would be 2.4% in 1 month. And if my shares get called away at 28, well, I would make the difference between 28 and 25.82 plus the call options that I sold for the first month and hopefully the second month. All right, so just wanted to share with you guys that I sold my Facebook shares today and for which reason. Let me know what you think in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. Or you can get $50 in free trades if you use the referral link also below. So it's your choice. Also check out the other referral links in the description below the video to help support the channel. Thanks for watching.